Hey guys, good afternoon, everybody. Today is Friday, May 2nd. It is 4:02 right now. Our scheduled mentoring session is with Mike today. I'm going to finish setting this room up real quick, and then I'm going to send the link over to him to join in shortly. It's got a few things here to update, and we should be good to go. Good. Looks like we are good to go here. So let me get this link sent over to Mike real quick. Go. All right, I'll just give it a few moments for Mike to make his way in. Hey, Mike.
On, buddy.
Hey, how's it going?
You can't complain. About yourself. How's the new house?
Doing good. Getting ready for everything to move over. We've for the most part moved most of the stuff over, but like all the little things now, it's just the small stuff like clothes and whatnot. But yeah, new house has been great. Yeah, just got everything all set up. I mean, mainly the office, thankfully, because that Monday, I feel like I missed out on a lot of trades. Did you trade on Monday?
Not really.
Okay, yeah. On Monday, I looked at the charts and there were a bunch of entries, but didn't take anything that day.
Yeah, so a couple things I was hoping to go over today. Um, so I want to say the one and only account I got funded was on, I don't know, let me look at a calendar. Yep, that's kind of what I figured. Like, so the fourth, I think, is when it finished. So basically the seventh or the eighth, I was active. So it was one of those, it might have been the 7th of
Mhm.
April. And then first day was a good day. On the 8th, I traded, had one trade, 410 profit. Um, and I was kind of going back and recreating, looking at some of this. And then the very next day, so the ATR was at 57 when I took that trade. And then the very next day, obviously the 9th, I took one trade well, two trades. The first one lasted 28 seconds and I got taken out with a 70 ATR. And that one whacked me out for like 560.
Hmm.
Um, Now those were both two contract trades, which quite frankly was probably a mistake with my account size. They probably should just be, especially with a 70 ATR. I mean, what is that? 350. Um,
Yeah, it's pretty high. You said two contracts, right? Two times five times 75. It was actually, wait, you said two contracts, right?
yeah, two contracts by 70.
Oh, by 70. Okay, so two times
Same
five.
things, too much.
Yeah, yeah, definitely. It's still too much. It was 700 risk on that trade. So that was pretty high for well, you're
Oh
on the
no,
50.
that was just straight retarded. Hopefully that word doesn't offend you. That was just stump stupid, is what that was. And
It's pretty.
so, and I didn't even let it go to the full loss. I caught out at 560. Um, I took another trade after that, like literally 12 minutes later. And I ended up with $40 in profit, but that's because I'm sure it started to turn against me and I got scared.
Mhm.
And then next day, and I mean, this was that week when the ATRs were just batshit crazy.
Yeah, week two, that was where I took my losses. The ATR was nuts that week. I couldn't even handle it, and I'm used to the market. That was like something I've never seen before. So
So
yeah, it
some
was
way, shape, or form, I managed to get out of that one that day with only a $5 loss, but I also traded 5 times.
yeah, it's a little more than usual, right?
Then the 11th killed me. I
11.
didn't I didn't lose the account, but I lost. I took one. The first trade was one contract, and it was at that was actually one that I did pre-market. Um, and it lasted like 9 minutes and something, and lost 530 on that one. So it had to have been close to I don't even know what that was. And then the second trade was after I'm sure you were off by then, but I lost 510 chasing, I'm sure. So it was like $1,090.
Okay, so two back-to-back losses on that Friday.
Two back to back with a simple little win
Okay, yeah.
of $21. I don't know that you really count that. So basically, and then you go into the 14th, so which was that following Monday, and net for that day was um down 400.
Okay. Did you take that during the live or is that outside trade?
I personally, I think I've been so in my own damn head after this. My psychology's been jacked. I just
Uh-huh.
that funded account of 50 is down to 48 something. So now it's panic, or not panic, but fear trading, right? You don't want to trade. You don't want to blow your one funded account up.
Exactly. Yeah. So you're trading with fear right now. A lot of emotions taking a toll on you because, yeah, I could see how like Friday probably screwed you up a bit with those two losses and that small win because then at that point it probably set you back quite a bit. Um,
I mean, at that point in time for the week, I was down $1,100.
yeah, and now you're down basically double that, right? I'm assuming you're at 40.
The account right now is 48.3.
48. Okay. Yeah.
So, I mean, I'm down a total of 1,700 in that account. And if you add, I mean, that was basically that was that week. So down 100 net on the first, whatever, 2 days, and then down 1,000, then down 400, then down 100. So, I mean, basically $1,500 plus or minus, give or take. I mean, it was right there. So yeah, I mean, it didn't double that, but then, like I said, then it went into straight, you know, confidence shot, the whole 9 yards, right?
Exactly. Yeah. So have you traded since then, or you just kind of left that account alone?
I've left that account alone and I've been playing around with an evaluation account. But again, it hasn't seemed to really matter the getting out of my own head, right? I mean, just to be
Yeah.
perfectly candid with you.
Yeah, exactly. You need to have, a little bit of a confidence booster to like, get some wins locked in under your belt so that you can get that confidence to take more trades. Because I was in the same boat. Like, the second week of April, I screwed up. Well, not really screwed up, but the trades just weren't working. And I was worried. I was talking to Kyle about this today too. Like, I had three losses back to back that second week of April when the ATR was all over the place. And I was worried on the 14th that I was gonna, because if I would have lost two more trades, my accounts would have been shot. Thankfully, we had a win streak from there. But yeah, I think that's kind of what you need because, like, for me, I was my even my trade psychology. I've been trading for so long. My trade psychology was pretty much torn down after that second week. But then, thankfully, the market kind of went back to normal the following week. Um, I think, yeah, what you got to do is you just got to like play with the evals first to like get your confidence back in place and your trade psychology back in place, and then you can start trading that. Because yeah, if you're at 40 at yeah 48.3 and you have about like 1,700 I think left in the account, right? So
You can go down to 47.5, so pretty much.
yeah. Yeah, because I think if that's the case, then you might have to. Here, let's see. What's your typical stop loss that you're using? Do you have like an average or?
I actually listened to your last call,
Mhm.
and um it's kind of been all over the place just because I hadn't really set one. I mean, let's just be perfectly honest. There really wasn't one that was set. So it was kind of, my contract size would vary based on what the ATR was, is kind of what I was doing.
Mhm.
Um, and then and so, like, here's where my head went, right? Okay, well, you've got the ability, what, $1,700 I think is what's left before it goes away. $1,800 just about. Um, so you, let's just say you use a 350 $350, which is,
Mhm.
on a 30 ATR, that's what is that? 5 times 3 is 150. I mean, three contracts, it would be 450. So you could do two contracts at a 30 ATR.
Yeah, yeah, that sounds about right. Or, otherwise you'd have to just go lower because so for me, I've been using the 40/40. I think, I haven't really been making the adjustments, at least not yet, because it's really hard to gauge where the market's going to be next week and like for the following months or the following weeks, I guess. Because the tariff stuff is still going to come back. Like right now, it's kind of cooled down a little bit, but
Right.
90 days, June 1st, June or June 30th, whenever it is, it's probably going to get a little crazy again. So. Um, I would say keep some sort of like specific ATR in mind. Like just have your like mindset to one. I would probably leave it at 40/40. That's kind of where I'm at right now because I've noticed that in the beginning of the session, the ATR will be a little higher, like above 40. And then towards the middle to the end of the session, it drops to like below 40, closer to 30. So I would rather have my TP stop loss set at the 40 and then adjust to the 30 or make it smaller if it's necessary versus taking something with like a 30 and then the ATR spikes up to like 40 and you're supposed to, adjust it that way. And it's not doable because you
Well,
have,
so for me, you got to remember, I'm only trading one account and I'm doing it right on TradingView. So before I ever take the trade, I can adjust the stop loss based on the ATR.
okay. Yeah. The only problem with that is that the, the number difference is huge with the mini, unless you're trading the micro. So you've probably noticed, like for me, I'm trading, I think 4 contracts. So 4 times 5 times 40, I'm usually risking about like 800. But if you go from like a 5 contract, it goes from 800 to 1,000. So it makes a pretty big jump. Or if you go anywhere lower than that, 3 to 5 times 4. So this is where it becomes a problem because if you're doing a 4 contract and then for whatever reason you switch back to the three, like these are your three main different numbers that you can, make or risk. And this is where it becomes a problem because if you lose like 1,000 for one trade and then you go lower for the next one, then you're going to be off by like maybe, basically two trades there. Do you get what I'm saying?
I follow exactly what you're saying, but here's my question. If I got a 40/40 TP stop loss and the ATRs only, call it, like today we were running 25/27, are you just saying put it in at 40/40? And because they're like, if it's like at 27, you're not generally going to hit that 40 profit or that 40 loss.
Yeah, exactly. So what I would do is I would just have a fixed TP stop loss so that, but like have it as close as possible. So like you said, I think I might have to adjust mine from 40/40 to 30/30 because it seems like the volatility, like we typically don't trade in the beginning anyways. That's usually where it's around like 40/50 and then it drops down to like the 30s. So I would probably set it to, let's see, because you have 1,700. Well, you're probably not going to trade that account, but if you are trading that account, Your risk is probably going to be around 566, or this is where you want it to be, so that you can have three losses back to back before you end up blowing the account. So
Yeah, I'm probably gonna go a little less than that just because, or I'm gonna sit on that one until I get the other one funded.
yeah, exactly. And that's probably the best case scenario because like we really don't know how May is going to be. Typically, so historically, I think from my data, the May months have been better than others. I don't know if I have any stats here for May.
That would be nice.
Yeah, let me see if I can pull them up.
But I mean, I can tell you so
Okay, so let's see. We got May here. So for May, we had a pretty good month here. So it was less trades. Actually, no, May wasn't so super great last year. I don't think this is gonna be the case this year. This is why it's an issue with like kind of comparing previous years to the current year because we have like a lot of different factors affecting the market this year. Like last year was like the Ukraine war, so like the war was the market was kind of iffy around that time. I think the war started in April, so it kind of lingered into May, and we had like crazy market conditions during that time. So I don't think this would be a good.
well, and also I don't know how comparable this would be because if I'm looking at your May right here, I mean, you were doing it looks like high-low scalps, triple confluence, and not even a whole bunch of MPS, and pretty much you're running all MPS V2 right now.
Exactly, yeah. So I don't think this would be a good this wouldn't be a good sample. So we can't even base it off this. I mean the MPSV2 is a little, I mean obviously it's a lot better than these here during that time period. Yeah, because it looks like, yeah, never mind. Scratch that idea. The stats for that one just wouldn't work because those strategies aren't being used. So yeah, I think the main thing that you can probably do is really just have some sort of fixed TP stop loss. The
All right, so
thing,
I don't want to sound just help me out here because I'm trying to grasp the concept. So let's say you go into it and the TP stop loss is running somewhere between call it 28 and 35.
Mhm.
That's what the ATR rather is running between 28 and 35. And I'm setting my trade up to go in the candle before, right? Why would I not adjust the TP stop loss to be close to where the ATR is? Um, or you're because like if I put it at 40-40 and it doesn't hit that 40 profit, but then it pulls back and goes into that 40 loss because it reverses. But if I'd have had it at say 35, I would have hit it.
Yeah, so like what I'm doing is I'm entering with the 40-40, and if the ATR doesn't change, like it doesn't go any higher, then I'll just adjust my TP down to like for example, today's entry. I went in for the 40-40, but I adjusted my TP to 35 because that's where the ATR was. I could have left it and it hit the 40, but I adjusted it to the ATR because I think that the difference between like 10 points isn't going to make a huge difference. If you're making a change of like 20 points, and that's going to make a big difference because that's going to be like maybe double your profit, right? Or half, or maybe a quarter of your profit. So I think 40 is it's a good number to start off with. And then if the market does get slower, I'd probably drop it down to like 35, maybe 30. But from what I've seen, from the market, let me just go to the market from today, the ATR. So from what I've seen, like our entries usually come around like 7:30. And the ATR here drops pretty low. So if it goes down this low, then I'll either adjust my TP stop loss or I'll probably just not trade around this time. Because earlier on like 7, see the ATR, it starts pretty high. It goes from like, let's go from like 6, or like, let's go from like 640. It goes from like 31 to
Today
about,
was pretty mellow.
yeah. Today was actually really mellow compared to what we're used to. But normally I would have it like around the high 30s to like the low 40s. That's why I've been keeping it at 40-40, because if I do need to make adjustments, whether I make it wider or tighter, it's only like a 5 to 10 point difference.
All right,
Um,
so you're in a copier, and let's say it goes down, you see it, you're in profit, whatever, and you're in at 40-40, and the TP or the ATR is somewhere around 31, 32, 33. Do you just manually close out that trade and it closes it across all of them, or what?
Yeah, so that's actually what I did today. So today, my main account closed out at like the TP of 35, but it like didn't close out of the other ones because it was just right at that specific price point. So I just hit flatten all on my copier and it pretty much closed out of all of them. So, my profits were like slightly off today. Let's see.
And that was the one today. I just went back and looked, right? And it just shows you that. So if you look at the 11th, I was down a grand.
Okay.
On the 14th, I was down 400. On the 15th, I was down 100, right? So pretty much just ass kicking losses. So I got off of the funded account, went to the evaluation account, and then the 16th lost 250. Then 95 on the 17th, 200 on the 17th, and honestly, 18th, 19th, well, I don't even know what the date was weekends. And then yesterday, I don't even know how that was a later trade, was off 105. And then today took one trade, 165 win, walked away.
Okay. Yeah. So it looks like, well, so the good thing is that your profits and your losses are like they're averaging around the same. You're not having like big wins or big losses against other days. It just seems like your win ratio is not high enough to like to take you higher. And I think that's kind of like the thing here. Um, well, I mean, moving forward into May, I'm hoping the month's going to be good. From what I remembered in the past, May has typically been a pretty good month. Not last year, but the years before that. So
Mhm.
I'm hoping that, we hit another win streak because we did have well, I had a bit of a win streak from let's see, the 14th till the 25. Then I didn't trade on Monday. Tuesday, no entries came up. Wednesday, I took that loss, and then I had a win from yesterday and a win today. So I'm hoping that we get a win streak because it seems like that's kind of all you need. If you have like one good week, I think that's going to boost your confidence, and then you can like hopefully get back onto your funded account and bring that account back to life. Um, yeah, I mean the only thing I can really think of for you is to have a
So let me ask you this. If you were in a $50,000 account, I mean, the reality of it is I just got to get the confidence back because I mean, I got that thing funded from where I was, where I started. Obviously, you watched, and I was, I was pretty jacked up. I mean, it was day after day, a few $100 profit, right? I was pretty excited.
yeah.
And so, um, but if, and, and I know I have said, and I've heard you say, well, you want to trade your evaluation account the same way you would trade your funded account, which is great, but I want to get another one funded. So, and that account right now is literally it's sitting at 49,382. So I mean it's off $600. That's I mean that's two trades, it's no big deal. But then it's two trades plus 2,500 or 3 grand, right? To get it
Yeah.
funded. And if I wasn't only had 1,700 bucks, what would you recommend, I guess, normal risk be on a $50,000 account?
So if you're going to are you talking about eval or your PA account?
Well, let's
Uh,
just let's go PA account.
okay.
What would you normally risk?
I would do 3 contracts. So I'm doing 4 contracts right now on the eval for my wife's account because I'm trying to get that funded like ASAP. So I'm okay with taking a little more risk on that one because if it's an eval, if shit hits the fan, I'll just do another one or reset it. But with the PA account, I would lower it by one. So I would basically, so normally right now, I'm doing a three trade risk. So like it's a total loss of 2,500 divided by three. This is how much I'm allowing myself to lose per day on a on the eval, but on the funded, I would be dividing that by four, which would be 625. And the reason I do that is because I typically don't have 4 back-to-back losing days.
Okay.
So yeah, that's a difference between eval and funded. So right now I'm doing 4 contracts. So I'm risking about 800 per trade. But on the funded account, I would drop it by 1 contract and then risk around this amount. So let's see, 3 times 5 times 40. Yeah, 600. So that's how I'm calculating it because I'm not really expecting to lose like 4 times back to back. I mean, if anything happens, possibly that might happen, but from just like looking at my calendar here, I don't really have 4 days where I'm like back to back losses for that many days. So just going off the data, that's kind of where I'm expecting it. I mean, even 2 trades back to back don't typically happen, but
Now, are you always one and done?
for the most part, yeah. Well, so for last week,
That's
last
the only one right there, wherever you just were, and that was April, where it was three. I mean, that was a 4-to-1 ratio, 4 loss, 1 win.
yeah,
From the
or
second through the 11th. But I mean, that's basically where I got hammered was right there. And I remember for some reason, weirdly, I remember that trade on the second. It was a trade that you missed the entry. You're like, I shouldn't have been in that trade.
yeah, I think I fumbled into that trade or something like that. Yeah, so that one right there, this one could have been easily avoided. I think for this one, some people won, some people lost. This was when that contract rollover happened, I think, where half of the people lost and half the people won it who were still in the older contract. Um, but yeah, so if I didn't make that mistake, this probably would have been a no trade day, and I would have had 1 win and 3 losses right here. But yeah, I think this is the only time I've had 3 back-to-back losses, and this was like that crazy week with the crazy ATR. But during normal market conditions, on a weekly basis, I'm probably having like 1 loss, usually 1 loss, because I'm doing that one and done thing that you just mentioned.
Now, on average, I would say by looking at it and having been, going through this with you, you're for whatever is 2 months, I guess now. I mean, wait, go back to January. January, it looks like you traded more days, but since I've been here and I wasn't really in here in January, it generally seems there's only 3 or 4 days, generally around three, that you normally take trades.
Yeah, usually because the other days, it's usually prices around the red flags or there's something that causes me, there's news or something that prevents me from entering a trade because it falls under my red flags. Early week of January, I was applying different strategies, so that's why I have like way more trades during these days. I was doing the micro scalp around this period. It was good for a while. I mean, it worked for a bit, and then uh, it just ended up eating up into my profits because the trailing stop would give me like very minimal and I would just rack up. You can see how many trades I took here. I went from like having 60 trades to 80 trades to 180 trades to 106 trades. And then after that, I was like, okay, I'm done with those micro scalps. And then I started taking just 1 trade.
All right, this is going to sound like a dumb question, but what exactly does the number of trades mean?
That's just how many trades are executed. So I had,
So if you have 5 contracts on 40 accounts, that's 200 trades.
no. So each trade is like every trade executed per account. So like on this day, I took, let's see, 180 divided by, I think I had like, actually I only had like 60 accounts. Yeah, so I took about 3 trades that day. I mean, it looks like a
Okay.
ton of, but it's because I had like 20 Apex accounts, my hedge fund accounts, and then I had the 7 Tradeify and whatever. So it basically added up to the account. So the trade number is how many trades were executed per account. So you can see over here, this is where like a lot of the trades were happening. And then over here, I started to, well, so I stopped uploading the hedge accounts around the 20th. So that's why you see the big difference here. They went from like 60 trades to 80 trades to like 180 trades. But over here, it went
Yeah,
down.
because that's in January because they didn't hit you on the hedge accounts until April, right? Or was that February?
Yeah. No, it was around April. But the thing is, I just stopped uploading them to the Trader Sync because what I had to do is I had to go into each account and upload it. So I had to basically log in like 60 times. And you know how repetitive that would be. And it's like,
There's no fucking way.
yeah, it just got tedious. So that's why I stopped doing the hedge accounts. And now I'm only doing the Apex, Tradeify, and Perdia because I only have to log in 3 times to get those up there. but to do the hedge accounts individually, I have to do them one by one. So like I was gonna do it at the end of each month, I'll just log into all the accounts, but then I got to a point where I was like, man, this is, I lose track because I'm logging into so many accounts where I'm like, I'm just gonna keep track of the Apex accounts for now, or the prop accounts at least, because they're easier to keep track of. So that's why some of these over here show like 180, but these over here show like 28 and whatnot.
Well,
First,
I think just as I exported these numbers and put them into a spreadsheet. I mean, I knew I had losing after losing, and again, then at that point in time, it was like, okay, I'm clearly fucking off in my head because everything I'm getting into, I'm losing, or the minute it starts to pull back or whatever, I'm not letting it ride because there had to be three or four that because I've been still tracking, right? I've been putting the long short positions in there, tracking them, and it's like, oh well, you close that one out because you got nervous because you can't take a loss because you don't want to take a loss or a big loss, and then had you just let it get that little bit of pullback, boom, it was a winner.
yeah, exactly. And that's what I was talking with Nikki about in the last session. She was pulling out earlier. She had that trailing stop in place where it would like cut her out like way too early. Like you said, if you do that, you're not getting that 1-to-1 ratio. And then you end up having to take more, you end up having to make more wins to recoup the losses and bring yourself back into profit. So I
Well,
think,
I noticed like today, the one trade I did take with you right at the end of the day, that you got in late and so did I. And because I was watching, I heard yours execute and fill, but I still think, I don't know, I think today was one 165. It was, and I only traded one contract. And it was 33 points was what I got on it.
nice. Okay. Yeah. But since you take one contract, you didn't really recoup very much, huh? Or as much as you were expecting, I guess.
You know what? I didn't give two shits.
You needed that win. I
I
think,
did. I mean, that's the God's honest truth, right? Because yesterday I took one later at about 8:48 and $105 because I mean the my last three trades on the 22nd and 23rd, one was 750, $7.50 because I think I actually entered that one the wrong way. I don't know. Or I got out at break even because whatever. And then 75 and 75. So they weren't, like I said, they weren't big losses. So again, that's what happens when you trade scared. But I mean, but then I go back, right, and I replay everything, still studying it, and it's like, okay, they're hitting the win percentage is there, but it seemed like everyone I was getting in just because of, the what's the rule? You fuck it up and you're trading down, you're stinking thinking, right? So everyone I picked that I got in, had a knack of picking the fucking loser.
yeah, exactly. And that's what I hated too. That's why I had to half my risk, the past couple weeks, because I would take the loser and
Super
then
case.
I would keep following. And then the other trades would win, but I wouldn't be taking them because I have that one and done type rule in place. So I think for you, probably stick to like one contract and just, trade it as is. And then on a weekly basis, that's when you should increase your contract size. Don't do it like per day because like you can really screw it up that way. Like for example, if you traded like if today was Monday and you took one contract, you made a small profit, and then tomorrow you up it to like three contracts and you lose, you're gonna be super far in the red.
Right.
So
Well, I haven't. I think. Oh, you know what it was? Those ones that were little. I was just because I was trying to build some confidence back. I was trading micros
oh, okay, that makes sense. Yeah.
because it was honestly it was about the win. It wasn't about the dollar amount.
Yeah, you just wanted the trade to hit and then you wanted to get that confidence back before you go to your
Right. So and the last time I took a two contract trade on the regular one was on the 16th of April. I haven't touched one since.
okay. So you've been doing like the smaller contracts since then.
Just one contract again because the ATR has been higher, and so I've been kind of playing around with that. So I think that's really it. I mean, I don't know that look, there's no trick to get somebody out of their head. I mean, the psychology is the psychology, and I think obviously the more actively I'm doing this, which is daily. I mean, I'm probably like you. I'm up at 5:30 every morning, so I'm ready to be down here because we're in California, obviously. So no issues there. So I'm here every day, and and good, but it's just I gotta get the confidence. Confidence begets confidence.
Exactly, yeah. And I agree with you too, because like, even on Wednesday when I took that loss, that was kind of shot to my confidence because I was so pumped up. We had a win streak going on from the 14th up until the 25th, and I was like, okay,
Hold on.
No.
Sorry about that. My wife came downstairs and then all three dogs decided it's time to play and jump around. So
no worries, it happens to me all the time. But yeah, like I was saying, so we had a nice win streak from the 14th up until the 25th, and then the 28th was a good day, but I didn't trade that day. And then 29th was kind of slow, and I was like, okay, the 30th, I was just getting that itch to take a trade. And after I took that loss on the 30th, I was like, so like I said before, I was taking half contract size, and then I increased my contract size this week because I was like, okay, I'm gonna go back to my one loss a day rule. And I took a loss, so that really took a shot to my confidence because I was like, crap, maybe I should have stayed at my half risk. But I just stayed on course and I continued with the same contract size. And then luckily we won yesterday and then we won today to bring me back in a profit. So yeah, like you said,
yeah,
there's
I've been chatting with Kyle just in the Discord too, because I know he's kind of in the same he was in the same spot there in that week, April. I mean, he took kind of an ass kicking too. Um,
yeah, exactly. And it's tough because it's like you can't really make any changes. Like the strategy is perfectly fine. Like you've seen it every day and I've seen it every day. It's really just your mindset. You have to teach yourself and train yourself to trust the strategy. And it's tough. I don't blame you. It's tough because you don't want to see another red day and as the red days continue to pile on, it's like there goes your account if it goes too far. But yeah, I
well,
think
you said something, I wrote it down actually. 3 months of consistency unlocks proof that you can do this. You said that in one of the lives.
yeah, exactly. Yeah, because the thing is, like, it's easy to do good for a week. It's easy to do good for a couple of weeks. That's probably what happened with you, right? When you got your account, or yeah, for you when you got that first account funded, I think you had to have been doing good for at least a couple weeks, if not a full month or longer, because you're kind of getting yourself out of that hole as well. And it really is true. Like it's easy to be good and confident for a week. It's easy to be good and confident for 2 weeks. But once you pass that month threshold, it's like how long can you keep this consistency up? And once you get to that 3 month mark, that's usually where you start to unlock more capabilities because you have, and that's what I love about this calendar because like this calendar shows, I already have 3 months of data, and now it's just going even longer. So I'm like, okay, this was a good month, this was a better month, this was an amazing month, and then we had a crappy month over here, but I was able to survive this crappy month to make it into May, and now we're back in profit again. So
Well, the funny thing is, I mean, I get it that the calendar date changed, but if you go back and go, so the second is 1 week, two, three, four. I mean, and April was a 5 month week, right? But if you'd have continued on the fifth month, right, go back to April. So if you'd have run this out, right, to the second, and because that's technically a full month, you would have actually been profitable. You see what I'm saying?
yeah, exactly. So it's like, the consistency, like we had like a crappy month, crappy week for like the week of April 2nd, or the second week of April, but I think everybody did, right? It wasn't just us. So,
Yeah.
everyone kind of screwed up there. It was really who could survive that crazy type of market, right? Because I know a lot of people blew their accounts, not in our group or anywhere else, but like just in general. Like I think a lot of people made a huge mistake during that week trying to chase those trades and FOMO their way back. But like luckily we stayed on track and stayed on course and obviously I took a fat loss there, but made it right back after. But like yeah, like you said, this week if this would have continued with the first and the second, this would have been positive because yeah, for this week or for this, let's see, I made 110, 250, and then minus my loss from yesterday or from Wednesday, 75, 720. Yeah, so technically this week I would be up 34,530. So technically it's been a good this should have been positive if it would have counted for the full month and for the full week.
Right. All right, so I had two other things I wanted to hit. I mean, again, but I wanted, for accountability for whatever you want to call it, but I just, so you can understand this is exactly where it is, and that's why, and where it was slowed down. I mean, obviously what happened, but you talk about it a lot, which is point of control and liquidity. I still don't understand how to identify that, and I know you use both of those as a confluence.
Yeah, yeah. So, well, I use liquidity as like target points. So the way that I mark up liquidity is, and you probably see me do it like in the mornings before we get on the live or before the market opens. But typically what I do is I'll go from the higher time frames down to the lower time frames. And what I use is I use the high-low indicator. So for this, I'll start on the daily, and you'll probably see me on the live sessions if you get on early enough with me marking these up, where I'm basically just marking up the high lows that are untested.
And then is that what is liquidity? That I guess that's what I'm trying to understand.
Yeah, so this is considered liquidity because this is usually where people get stopped out at. So like for example, so say if let me just turn everything else off here, so that's not all. I could just leave it on, I guess. Or I could turn off the pivots maybe. There we go. So like just say for example here, like someone was to take a sell at some point, just using this as an example. Say we got a sell signal and someone took this as a sell entry. Um, Usually what people like to do is they like to place their stop loss at the swing high, right? And the swing high is going to be right here. So if you were to enter a trade, whether it be here or whether it be down here, their stop losses are typically going to be placed at the swing high. So that's why we identify this as liquidity, because that's kind of where orders are sitting. And that's why we consider them liquidity, because where the orders are sitting is when price. So for example, if price was to come back up from this area and it was going to trigger this area right here, like all those pending stop losses that are just waiting right there, once they get triggered, it's going to flip the orders from sells to buys, and it's going to push liquidity to the upside. Does that make sense?
Say because everybody that had a stop loss up there just got out, which is then going to drive the price higher, correct?
Exactly, yeah. So here I can probably show you on lower time frames. It's kind of harder to see on the higher ones because price is just never going to trigger that area. So let me just mark up the liquidity over here, and I'll see if we can find an example of like when it got hit, because I think it did get hit here as soon as market opened up. Same. All right, so like okay, so this is a perfect example right here. So say for example, say you took a sell entry, like for whatever reason, you thought there was going to be price was going to continue dropping from here. So say for example, you enter a sell right here because you see the price coming down. What normal retail traders do is they like to place their stop loss at the swing high. So obviously you can see this is a swing high right here. If I was to take off the indicator, people will typically take a trade like that, maybe go for a 1-to-1, maybe go for 1-to-2. This is typically how people would like generally want to take a trade. So once you're in that position right there, in order for them to get pulled out of the position, price would have to push up to this area, right? Because that's where their stop loss is. And the reason why we call that liquidity is because as soon as price comes up to this area and it triggers here, it's going to flip those orders once the stops get filled, and then buy liquidity is going to get in. It's going to push price higher. And if you look at this next candle here, there was an example right there. See how price pushes up and it shoots all the way up because all of these stop losses got filled. And I'm sure you heard of the term stop hunts or stop loss hunts. That's basically what happened here. The stops got hunted, and then it hit the next level of liquidity right there too. So I don't necessarily use this as a confluence. I just use this as target areas. So like, for example, like say, for example, we're looking for an MPSV2, right? I'm looking for price to reach that next level.
Okay.
And that's where the confluence comes in. Not the confluence for me to actually take entries at these points, but I'm looking for reasons for price to go down to like here, for example. So like, for example, if I had a MPSV2 that came up at some point, I mean, obviously it's not going to come up because this whole morning there was no MPSV2s. But see how price pulls to these areas? So see how it grabbed the liquidity right there? And then now the next area of liquidity is gonna be down here. So again, this is the same thing. Say for example, people chase the buys here, right? So say for example, at this point, liquidity got hit, and people like whoever's trading, it doesn't have to be our strategy, whatever strategy's out there, they think that price has reversed from this point, and they're like, okay, I'm gonna ride this up now. And then their stop loss is gonna be down here because now this is gonna be the swing low, right?
Right.
So again, I'm using this as a confluence to identify where price is likely to go, not necessarily for entry, but just to, if I have an MPS in that direction, then that gives me confidence that the trade will play out how it's supposed to. So right here again, price is up there, and then it reverses back down. And again, like I said, once price comes down and it hits this area, it's going to trigger the stop losses. But I'm not using that. So if you want it, this is another strategy. If you wanted to apply the strategy, it's called the liquidity push. There's a couple of people in the group who still apply it. Basically, what they'll do is they'll set like a pending order at the liquidity. And as soon as it gets triggered, they write it down for like a quick 10 points, like a quick little scalp to get in and out. But I don't use it that way. I use it to just identify as a target. So for example, if we had an MPS V2 here or an A++ setup, I think, yeah, this was an A+, where it wasn't A++, but it could have maybe classified as an A++ because it was an engulfing candle. So if I was, and let me just go back over here. I know this isn't an A++, but I just want to use this as an example here. So say, for example, we have an A++ there, and then say we have all these confluences on the market profile and whatnot. We're just going to say that there was confluences on the 1 minute, 30-minute, hour, etc., whatever. Say we have all those confluences, and then I have my target here for like 40 points, right? Because I'm typically doing like a 40-40. So if I have all those confluences, and I also see that there's an area of liquidity right here, this would give me confidence that price is likely to push down to that point, and it'll hit my TP before it gets there. So if price pushes down, it's aiming for that area of liquidity below. See how it like knocks down right there? It gets really close to liquidity, but it doesn't actually hit it. That's for the most part what I'm using it for. And there you go, and it finally does hit it right there. So I use it as a target area, not necessarily as a confluence to like, okay, take this entry, but it does give me confidence that, okay, if there's an area of liquidity down there, it's probably going to.
So if there's an area of liquidity and you're in a trade that's going that direction, it just builds an extra confidence. So for example, when you had that pullback up, it didn't phase you as much, even though that trade's longer. I mean, I'm with you. I like the 1 to 2 minute trade. Just get me in and the fuck out.
Exactly, yeah, 100%. That's literally what I'm looking for, and that just gives me an extra confidence. It's not something that's like one of the requirements that I need, but it's an extra confidence. So, like for example, if I was in that position and it pulled back, like you said, I wouldn't freak out here and try to pull out early because I'm like, okay, we have the confluences on, say, the market profile, the clean chart with the levels, and just say we have like multiple confluences. If we have multiple confluences plus we have liquidity sitting down here, then I'd be like, okay, I'm just gonna let the trade breathe a little bit and just let it play out. Because in that situation, I know that this is just a small pullback. And sorry, necessarily 1 second. Amazon drivers.
You're good.
All right, it's good. Yeah, so yeah, in a situation like that, that's where I would like hold on to it because I would have targets down there for a price to reach. But then like all the confluences kind of come together. So like momentum, market profile, volume profile, there's so many confluences that I use, but obviously the more confluences you have, the better.
Now, I don't know which one's which, but the bottom green, blue, or red, right? I forget the name of it. Indicator that you have. How
Oh,
important is that for an MPS V2?
the trend meter down below, this right here.
Yeah.
It's not super important because the thing is the trend's always shifting, right? Like you can see the trend here, it kind of shifts from from blue, green, red. This again is just another like a confluence and confidence booster with your position.
Yeah.
The thing is, this is laggy. So like you'll see here, like you'll have an MPSV2 come up, and then the trend meter is still green, right? But typically what happens with the trend meter is that it shifts from green to blue to red. But it lags. So like it'll give you that confirmation, but like later on. So say for example, if this position was running for like 20 minutes for whatever reason, right? Say it was just running for 20 minutes for whatever reason, and it starts to turn red down here, but you're still in the position. I know you wouldn't be in the position for that long, but just say for example, you're going for like a bigger target. Let me go over here. Yeah, like say if you were going for like a bigger trade, I would also use this as a confidence here, as a confluence and confidence boost right here as well. So say for example, you enter a sell at some point over here, and the trend meter is green, but then you see it shifting to red. So if you see it shifting to red like that, then this would kind of indicate that all right, price is probably going to keep dropping lower because the trend meter is changing. And again, right here, and then it does the opposite, right? So for example, say if you were down here and then you were taking a buy. The thing is, it's like hard to like show you examples during this, like, because you saw the market today. It's just going back and forth the whole day.
Yeah, it just ranged a lot today.
Yeah, literally the whole day. So, like, for example, here, say this is like coming up, right? And then it retraces right here, but you see the trend meter is turning green. So you can kind of trust that it's going to pull back up at this point, like it did right there. So, the trade meter is not. It's important when you're trading a specific strategy based off the trend, but since we're using market profile and for the MPSV2, the thing with the MPSV2 is that we're looking for small shifts in the market. So if you're trend trading, it would be useful because you want to see the push up, the balance, the continuation. So like in a situation like this is where it would be important. But for the MPSV2, we're looking for the small shifts in the market versus like these bigger trend moves. So yeah, I would say it's not super, super important, but it does help if you do have that confluence in your direction.
Okay. Well, that's kind of what I wanted. Like I said, I don't want to take too much time, but I just wanted those were just like I said, at this point in time, it's going to take a week or two of some confidence and not being impatient. I think that's the other part, right? You want to get it done. You want to do that disbursement and go from there. But the more impatient you get, the quicker you blow up the fucking account.
Exactly. Yeah. It's gonna really take patience because the thing is like you don't want to develop bad habits, right? Like if you start to rush it, then you're gonna develop bad habits. And then say for example, you rush it and then for whatever lucky reason you bring the account back. If you keep trading that way and you don't go back to like how you were persistently before, it's gonna be even quicker to blow the account the next time around. Because I feel like that's what happens with a lot of people. They start to take more risk. Like for example, your account's kind of down on the PA, they start to take more risk or they double the contract size or they do something crazy or they change strategies, and they go off their game plan. What happens is they might get lucky and they might bring that account back, but they don't never go back to what they were doing before. They stick to what they were doing then, and then the account is gone by the next week. Because the market's not always gonna, you can get lucky. I feel like with the market, you can really get lucky, but getting lucky for an extended period of time is like not very realistic.
And see, I'm not someone that gets anxiety or any of that kind of shit like that. But man, those 75, 80, 100 ATRs, that was just friggin' crazy. I mean, it was just moving so fast. It was tough.
Yeah, exactly. No, that week was crazy. I've never seen the market like that before. There's news articles everywhere saying like, this is the most it's moved in like 10, 12 years. The crazy thing is like I looked at my long-term investment accounts and they're back to normal. If you look at the US 30 or the YM now, we're actually back to like 41,000. That's pretty much back to, we're not all the way.
I know it's funny. So I've got friends that are on both sides of the political spectrum. I mean, and I'll tell you personally, I tend to be more fiscally conservative and socially, I don't really give a shit. Marry who you want, live your life. It's not my concern. I don't really care. Right. But I think the country should be run somewhat like as a business. And I mean, I think we're in deep shit with the trillions of dollars of debt that we have, and something needs to change. Do I know And whether it was the left or the right that was going to make that change, the end consumer is going to feel it to a degree, right? Do you expect that kind of volatility? No, but I was talking to my one buddy who tends to fall way more left, and we were talking about the market, and he's like, "Yeah, I'm down whatever it was, 20%, 25% in his long term." He goes, "You know what? I didn't bitch a bit when I was up 45% when Biden was in office, so I really can't bitch because Trump's in office and I took a 20% hit." And then we got together just the other night, and he's pretty much right back to where he was.
Yeah, exactly. It's a circus that we're in. It's like it's all manipulation, honestly. I feel like everything's kind of baked in already, and like, crazy stuff like this is gonna happen. But if you can just hold tight or like, weather the storm, it's gonna go back to where it was or where it should be.
Right.
Yeah.
You are you actually studying for the three or not? Because when we were chatting about it before, just in the Discord, you're like, I just don't have the motivation to do it.
Yeah, no, I've been taking a lot of practice exams. Like the way I take those tests is I just take as many practice exams as I can because I have the actual questions. They're just worded differently. So I'm like kind of memorizing the questions and then memorizing the answers so I can just like knock them out when I get to the actual test. It's all multiple choice, so it's really for me. I'm not a good test taker, so for me, I'm more of a visual, I guess little, not learner, but visual. I'm visual with like the tests and stuff. So like what I need to do is just take a bunch of practice exams and just knock it out. I've been doing like pretty decent on the practice exams, so hopefully when I do take the test, it'll be enough to pass. I think it's like 70%. So
Oh, I remember when I took the seven and 63, you needed like 180 to pass, and I got 179. I missed it by one question.
man, that's the worst. Yeah, it's tough. Yeah, I'm the same way. Like, with the test, like I've been taking these practice exams and I'm getting like 69, 68, 67%. I'm like not at that threshold where I'm like consistently above 70. But once I get to that point, I think I'll be good to just knock it out.
That's ain't nothing wrong with that. Now, is it just out of curiosity? I see Tark in there talking a lot about looking at this point and that point. And has he been trading a long time? Is he looking at? He seems like he looks at different stuff.
So he's been trading for a while. He looks at the same stuff, but he looks at them on a different time frame. So like he does the market profile, but he has like I think four different screens where he's looking at the rejections and stuff. He's been trading for a while, so he was more of like he would do like a lot of like just random trades. Like he really didn't know how to read the market, but he would take trades and then just kind of hope that they would hit, that type of thing. He didn't have a strategy or a plan in place. So now he's kind of using like those riskier analysis that he did before, where he kind of would say, "Oh, price is going to go up or price is going to go down from this point." But then now he uses the strategy in my analysis to kind of help him even more. So he
Okay.
does have a background in trading, not actual trading. He used to trade like meme coins and stuff or then crypto. So he was like trading a lot of crypto stuff. But that stuff didn't really have the technical analysis of like futures and stocks or whatever, like the more stable assets.
One,
So
there's not really a whole lot of historical data on it either. So,
yeah, exactly. So he sees the patterns and he sees how stuff moves around, but like now it makes sense because I've taught him the names of these patterns and stuff like that, so he knows what to look for and he can kind of call them out. So he's been a pretty good help in the chat as well. And his analysis usually lines up with mine, so it's a benefit for us for sure.
and no questions there. And I think, the other thing, because Kyle and I were talking, and he was basically just, following all of your trades. And I mean, I got zero issue with that, but I'm thinking, okay, I got to be able to stand on my own 2 feet. I can't just not do especially if if the MPS V2 lines up, I see it, da 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 da. But and just to wait, you know, to just purely mirror your trades. I mean, it makes sense, but it's like I got to be able to see it myself too.
Yeah, exactly. And I talked to Kyle about that too, because the thing is, when Kyle first started, he was kind of doing what you were doing, but he had no trading background. So like, for him, it was kind of like trial and error, like make a mistake, do something right, make a mistake. And then it got to a point where like he just wasn't getting anywhere. Like he wasn't finding the consistency. So he's kind of in your boat where he needs that confidence booster to like get him in line. So that's why he's mainly following what I'm doing. Once he gets his accounts back to where they need to be, then he's gonna go back and like probably start taking his own trades as well. But I think
All
for
right,
now,
well that makes sense. I get it. Yeah, I mean, you said he's a kid, right? Well, so are you to me, but he younger, right?
Yeah, no, he's pretty young. I think he's like in his lower 20s, so he's pretty young.
Yeah, definitely a kid. My oldest just turned 27 on Sunday.
Oh, nice, nice. You never thought about getting him into trading?
You know what? I've got so right now I've got um like two or three people that are kind of tracking what I'm doing.
Mhm.
Um and I'm not going to, albeit I believe in what I'm doing, but I want to have some verifiable, like, yep, I pulled $500 out today or whatever the case may be, right?
Yeah, exactly.
Um so I would imagine my younger one gets back from, he just FaceTimed me this morning. He's deployed in Qatar right now, my 24-year-old. Um, when he gets back, um, which will be, I guess, Monday, I would see him probably jumping in to play around with it and learn more than the older one right away. Um, it probably lines up more in what he does. But yes, I would definitely get him into it. The problem with my younger one is though, he starts work when he's here. So he's a crew chief on a C-135 refueler.
Okay.
But he actually does that job on the civilian side as well. So if that makes sense. So he's out at Beale Air Force Base and he's in the reserves, but his full-time job is doing that same job that he does in the reserves. I know it sounds goofy, but it's just how it works. But he starts work at like 6 o'clock in the morning. So it's going to be hard, but he's got the next month off.
Oh, I
So,
see. Yeah. It's gonna be hard for me to get a like trade in the morning. You have to trade at a different time or just trade on his days off, I guess.
well, or what he can do is once he really understands, he has a laptop, and I think 90% of the time from 6:30 to 8, he's probably just sitting in the damn whatever they have there, not doing shit.
Yeah.
But it's tough to go from not ever doing it, in my opinion, to just jumping on a laptop and just knocking it out because you see it so clearly, right?
Yeah, exactly. And just, dabbling in it because you never know. Like your son might just pick it up like that and he just might be killing it straight out the gate.
Also very possible. You know what? I think probably that there's a possibility for that for both of them because they've got zero trading experience. It's like, okay, you're giving me a formula, I'm going to follow the formula, and that's all I do. I don't even have to think.
Yeah, exactly. I think those are the people that learn the best because they don't have the capacity to have their trade psychology screwed up because they don't have trade psychology. They're kind of just following it and executing as they're told.
Right. Right. So, all right, man. Well, I appreciate it. When you get, I think mine recorded it, but nonetheless, when the recording downloads, if you'll send it, I'm gonna look at it obviously again. But yeah, that's kind of where I'm at. Like I said, it's not. I think the worst part is the pressure you put on yourself, right? It's like, okay, I got it funded now. In 8 days, if I've made X amount of dollars, I can do a withdrawal, and then that's where I think it shit cans you.
Yeah, see, the thing with the PA account is like we just talked about earlier, you did well for like the first couple weeks, but then you hit a rough patch, and that's kind of like what happens with a lot of people. It's like it's hard to stay consistent for more than a couple weeks, for more than a couple months, and that's what sucks because you're stuck in this eval phase, and then once you get past this eval phase, you're on like cloud nine, and you're ready to hit the ground running with the PA account. That's when your rough patch hits, right? So it's really controlling your psychology and being able to weather the storm during that rough patch because after every rough patch and you've seen from our stats there's another win streak that's going to follow. So
Right. Right. Well, and I mean, it was almost like a perfect storm, right? We're running 30 to 40 ATR, and then literally overnight, it's 2.5x that. It's 2.5x what that ATR is. So it makes a huge difference, right? You can't, yeah, it just makes a huge difference.
yeah, and there's no way we could have predicted this, right? Like I knew that the tariffs were going to affect the market, but not this much. Like it's crazy, 100 ATR, 200 ATR per candle, and it's like spiking 1,000 points per day. We don't even see that like in a month's time. It's nuts.
Well,
So.
no, yeah, 100 ATR and a candle, and then you get in, it sets up right, and then the next fucking candle's 200 points the opposite direction. You're like, the fuck did that happen?
Yeah, no, it was frustrating. It was one of those things that are just, you just couldn't explain. You had to be there.
Well, but that's why I wasn't upset in the fact that, I mean, I was bothered where it went, but the fact that I'm like, look, stop right now. You aren't. So I just pulled away from my PA account. Otherwise, I'd have blown it up. And I mean,
Yeah.
it sucks now that I've got to rebuild it because I mean, I've done the math on my PA account. I mean, I work on in a spreadsheet a lot. It's just easy for visual for me. But even to get to a point where I could do call it a $500 or where I could get to the point where as I trade for it, it's 4,300 bucks. And I'm 3,600 away, actually less than that now, I think, but either way, um, 3,600 away from the other one getting funded.
Yeah, yeah, exactly. So you might as well just stick to that eval for now, get that funded, and then I guess add the PA to your copier, and then from there you can
Well,
build
and
out.
that's the other thing. I mean, right now I don't have a copier. Um, because I like you, I'm on a Mac.
Yeah.
So it right now it's just the one. But yeah, you're right. That's exactly where I need to go. And then it's just I mean almost I think almost a copier, whether you have PAs or funded accounts in there, it probably will for me is just gonna it puts you on that it doesn't really matter. The trade's the trade. It doesn't matter if it's filling in the funded account or it's filling in your PA or in your eval.
Yeah, yeah, exactly. It doesn't matter where it fills. If you have the copier on, it'll copy it over. You can trade on Tradeovate. So here's the thing with you could use the built-in copier with Tradeovate on the web platform. The only problem is that it won't automatically set a TP stop loss. So you can enter the trade, but then you'll have to drag your TP stop loss to like those prices once the trade started running. So that's gonna be one option for you initially. And then in the future, if you want to use the copier that I'm using, you just have to run it either on a PC or figure out how to get a Windows on your Mac somehow.
Yeah, you and I talked about this parallels. I'm not, and I mean, I got parallels running fine. It's just going to be a matter of, I don't really, because I think I have a different copier than what you have.
Hmm.
So, but either way, one thing at a time. Let me get this other one funded and then, go from there.
Exactly. Yeah. We'll cross that bridge once we get to it. We're not there.
Again, ain't stressing. When's the due date again, man?
Due date is July 11th. It's coming up.
Yeah, it's going to be here sooner than you know.
I know, time's flying. It's crazy. We're in May already. I feel like April just started, but I'm glad April's over with all that
Yeah.
that happened during
Did
that
you
month.
did you get the registry all done? I saw you put some question out there on one of your social medias.
Oh yeah, so I think we have it set up for the most part. We're still kind of thinking of like little things because from what I've heard from a lot of people, it's like a lot of stuff doesn't really matter. Like a lot of the gadgets that come out, it's like a lot of them are kind of pointless. It's really like about the diapers and
Dude,
bottles, basic
that's
stuff.
all it's about is the diapers, the bottles, and the the burrito blankets is what I call them, the little thin blankets that they like to be wrapped up in.
Yeah, yeah, exactly. Yeah, that's pretty much the most that we put on there, and we just like pretty much put gift cards on there so we can just buy stuff as things come along because we don't even, first kids, so we're gonna figure it out. Trial and error.
You know what? That's the only way to do it. There ain't no damn manual for being a parent, and it don't. And in the stages change, right? You just it is what it is, and it's the best thing ever. But it's there ain't no fucking operating manual. Oh, I mean, what to expect when you're expecting is great for her to know what she's going through when you're a pregnancy, I guess. But what to expect when you're a parent, you just have no idea. But yeah, just like you can't predict what the market's going to do, you might have some patterns, but you just never know.
Yeah, yeah. Every baby's different, just like with every day in the market. It's gonna be a new thing for me to get a grip on, but we'll see how it is once the time comes.
You'll have fun, man. So, all right, buddy, I appreciate it. Have a good weekend.
All right, Mike.